trading and with the Simpler Stocks Mastery. I'm going to be on the last hour. I'm watching stock stuff, I'm watching future stuff, and I'm watching charts. So let me start recording this. Sorry about the 3-2-1. So I'm just experimenting with this to see if it works. And I will be on live in a couple of seconds on the option room as well. And I'm going to start by showing a couple of cool charts that we hit this morning. And I'm not that bearish here. So I just want to make that clear. Not that long term, but I watch a lot of things like VWAP, and it's really hard for me to show the conception of VWAP, except I look for things that are too extended. So, I mean, that's what I do in here. So give me 1 second. I'm watching everything to see if it's working because I'm dually broadcasting and I always seem to mess it up. So I wanted to be sure I was doing it right. And so far, so good. So just want to let you know that. But when it starts at 3 o'clock, yeah, right in here, I'll be going over it. But the only way that I use the VWAP is I see so many people screw up with the VWAP, and I want to go over it on the options room. So I'll be in there in a second. So just keep that in mind. But I don't use the VWAP on the upper left, that black line. I don't use it as like an end all. So I use it in relation to how far it is from it and also how other indexes are acting toward it. So like if the NASDAQ plowed under it while the ES is over it, that's a big old warning sign. So just keep that in mind. That's how I'm looking at it. So what are the things I'm going to do in here? Well, when I go over everything, it'll be charts. Then I want to show unusual option activity in stocks that have earnings. So those are always exciting to do. And there's one that has really, really piqued my curiosity. And I'll go over that like in about a minute. But I'm telling you right now, the overall market, it's really hard on the right when the advanced decline, the net advanced decline is only down 900. It's really, really, really hard. And let me go put this up here. Let's see if I can share everything without blowing it up. Let me see. There. So welcome options room. I'm on the Simpler Stocks Mastery on the options and broadcast into YouTube, which guarantees I'll probably say something really stupid. But the first thing I wanted to show you was something that JC also mentioned in here is about the VWAP. And I'll show you what I'm talking about in here is I'm not saying any indicator that I use that you buy at it or you sell at it, but I'm watching this. So this is just a standard VWAP, eight different products with a 1 minute. And see how far this is from the VWAP? That's pretty far on a 1 minute chart. 15 is a little far. So just keep that in mind in there. This is the ATR trailing stop. I'm not caring about that right now. No pun intended, Karen, because about Karen. So sorry, that was just coincidence. But I'm not caring that much about the ATR trailing stop right now. I'm caring about how far the NASDAQ is from all these. That doesn't mean you have to go straight up, but to me, it means it's not the time to be shorting. So just keep that in mind in there. Also, the VIX on the rise already gone down. So today is a lot about markets getting up near their fundamental resistance. So that's number one. So I thought I'd go over that, like I said, overall market perspective first. So what do I mean by fundamental resistance? So I hope you can see this chart. There, fundamental resistance. So this is the support. And as you see, it held. All I'm doing is prior tops become support, but it's a zone. and you combine that with the VWAP, it's too far away. Yeah, that's where you don't short. Let's just put it that way. So there were a lot of places, but not here. Now, the next thing I want to go over is this is what I mean by fundamental resistance. Now, I'm not Mr. Fundamental. Don't get me wrong. I'm not perfect at fundamentals, but this is what I'm looking at. So you have the ES or the Dow or whatever, but I'm going to take the ES or the SPX on the right, on the left, and I'm going to take the bond market on the right. Now, most people know I obsess about the bond market. I obsess about the bond market. And the reason I obsess about it is because of PE ratios. So the best case scenario right now is about 230 earnings this year, and multiply that by like an 18 PE. All of those are generous. Now, why is it 18 and not 17 when the ES was down here? Because the bond market has rallied or rates have gone down. That's why the bond market on the right with the FOMC coming out is so important. Because if this breaks up, heck, maybe you can have a 19 PE. If it goes back to like lower levels, then you got to think this goes back to lower levels. So this is, to me, fundamental resistance. That's it. And that started happening on Friday. There were so many people saying that 4,100 was about it on the futures. And like the reward was like 20. So, and if you're wondering, if you multiply it, it's 4,140 on the futures. But just the risk reward stunk, so people just dumped a little. That's how it looked to me. Now, so definitely this week we have to watch the action of the bond futures. Right now, they're staying down. Now, if right now the ES was down 41 like it is, you can see that on the upper right, and the bonds were up here, darn right I'd be a lot more aggressive on the long side. But right now, you are not sure which way it's going to go. So you look at this, that's December 27th, and that's December 27th. I like to use these things. I just call them bubbles. So I'll show you what I'm talking about. I like putting circles or bubbles where they seem to follow each other. It's been working great. You see them down here. It's been working great. So now what's happening is the bonds haven't made a new high, but the ES tried to make a new high. And now you see why I was cautious on Friday. So now if the bonds go all the way down to here, you got to think this is going to go to here. That's 100 points. So that's why the bond market is so darn important in here. So just keep that in mind in there. Yeah, Penn, I'm still wondering if it's really 41.40 on the SPX. So it got close to it on Friday. That's why now when it's at support, and it's far from the VWAP, that I'm not shorting in here. I'll have longer term shorts maybe, but I just can't have a lot of shorts in here other than things I have longer term. So I just want to show that. Now, what did we do today? The first thing I do is I'm doing a chart patterns class. Yeah, I had to harp that a little, but this is what we did. I put my money where my mouth is. Now, what am I talking about? Two things. So last night, Sunday night, my wife's like, how do you know these bear flags are going to work? So I want to show you something. Is last night, I really did this trade. So you got a 5-minute chart on the right, and on the left, you have, let's say, an hourly. So this is going to be one of the slides. I love big red candles or big green candles, and I take out all the garbage candles. When I see a big red candle like that, usually after that, you start seeing bear flags. So I was sitting around with my wife. I almost said messing around with my wife, but no, we were sitting around, and I said, this is a bear flag. So you could say it's under the ATR trailing stop. You could do a million things. So I said, I'm shorting here, 40.78. See the 40.78? So I had to stop up here. Like if it invalidated the flag and got back over this trend line. I gave it a little latitude, like 40.82 was my stop. Now you might say, well, why didn't this one work? Because that was after the close on Friday. And after the close on Friday, it just sort of futzes around. It can gap up or down Sunday night. I don't care about that. Just like JC talks about, he doesn't trust the first half hour a lot. Same thing with the futures. So this broke here. Where do you get out? Well, I just put in, because I was going to sleep, I put in 40.70 and made my 8 points. But if you use this 5 minute and just use the ATR trailing stop, check that out. There, 40.48. So sure, it went lower, but that's a darn good trade. So I was just going to tell you, after that kind of thing, you see bear flags, which brings me to the next thing, what we did this morning. Here is Tesla. Forget the 5 minute. We're talking about this. Where's the big resistance in Tesla? Big resistance is that red line, just prior tops and bottoms and sort of coagulation. That doesn't mean blindly short it. It means look for bearish patterns. And that's what we did today. So we shorted here. Let me be sure I had the right time. Yeah. We were a little cute about this. And I'll show you the mistake and then the good one. So if something really sets up, you can make mistakes and go right back to it. So I shorted it right here. That was stupid. So got stopped here, point. And like by the time I posted the trade, I was stopped. That's always humiliating. But it started to form this. Now, this isn't a perfect bear flag because the prior move wasn't that far down. But we shorted here, right in this zone, right at this resistance zone. So we were short here, made. We got out of most here. So made our 7 points and we were out. But where's the real support? Well, I showed you the real resistance. The real support is all the way down here. Not today. I'm just telling you that's where the real support is. So I'm still going to try to play Tesla. I mean, that sure looks like a bear flag now. How would you play Tesla at the end of the day? Well, you probably shorted in here and you have a stop here, but it's getting a little near the end of the day. There. So I'm still short. Tiny Tesla. I bought, so we shorted again. We shorted right here. Right there. Then we bought back half here. Right in here. We took our measuring. And I'm still short. Just a tiny bit. Not enough to make a difference. But I'm just telling you, if that doesn't hold, you're talking about 166. It's just a little late in the day. And the ES is too far from the VWAP. If you mess around with Tesla, you just do a tiny amount. So if you want to do a tiny amount here, you just got to risk about 85 cents. And that's just the way it is for today. So that's my first one to watch today. No doubt about it. And because I'm still short. I just don't like that the broad market is too oversold. That's what bothers me. So just keep that in mind. Will I be out by the end of the day? Yeah. I don't like being in that stock overnight. So just keep that in mind. And like I said, if you go over, yeah, thanks, Penn. You can put that on the options room. That was a good one. That was at least 7 points. And you see it over here. So the next thing, where's the ES going now? Well, to me, the ES is at support on the left. Prior tops become support. So what do you do now? Well, that thing worked from last night. So that worked. But now you got this. You got this whole area here. All in here. So there are a couple of ways to play it. Obviously, if it breaks there, all heck's going to break loose. No doubt about it. But I went and did this. This just seemed like a good thing. Now, I'm short Tesla. if this, I have to digress and show you this. There, that better hold. Darn right you could go and short a little and stop yourself here. You never know if Musk has a text or something. But if this doesn't hold, you're talking about another 4 points in an hour. So I'm short Tesla. Now you might say, why don't you just go and buy the 65 puts? Yeah, you can. I would rather buy the 60 puts so you could stop yourself if they do some kind of short squeeze. So let me go in and look at it. Like I said, the big danger here is that the ES on the upper right rallies 10 points, and then you're going to be wrong. So a lot of it depends on that. So let me look at some way out of the money puts for you. Because if it goes down, the volatility is going to go up and you'll be fine. I'm not buying the 67.5 puts that are $5. See, the 60 puts are 260. So how do you do that? Well, if you buy the 60 puts, right now and the stock starts going up, you're going to get hurt real quick. Look at that. Yes. Actually, just to let you know, I knew I was on a lot of sites. So I just told you I was short, and I went and shorted 10,000 shares just so I look like a genius in here. But no, all kidding aside, looks like a Brecher ledge, which is a horizontal trend line. If it doesn't hold right here, you're talking about here. Now, it might stop at these little things here. Maybe. But do you see what I see? So let's go and put this on a 1-minute chart now. All right, where would I get? Well, it's at some support. Where am I going to just say, yeah, I'm wrong? Probably if it gets back over, I'll be more latitude. I'm short from way higher, probably 167.70. So far, so good, and that's helping dragging down the ES, which is good. So I'm just going to let that simmer. Now, I don't know on Schwab how to put one cancels the other, but usually when something breaks like this, and I'm short from way up here, and it's right here at this, a lot of times I'll just buy back half. I mean, that's a quick point. So, but I'm not sure yet. I don't know. Then I play with the house's money. Sometimes it's just financial reasons. There. I bought it back at 168.15. Half. Now, the interesting thing is, where the heck are the 160 puts now? That's the next thing to look at. All right, we were just talking about buying them like at here, what, 260. So the stock went down a point, you make 20 cents. That's not really worth it, especially if you get stopped out. The key is now if it breaks, because then you're going to start seeing the implied volatility go up. So I'm still short half Tesla right in front of you. That was pretty cool. So that was pretty cool. Second thing, what else am I going to do today? Is there anything I want to buy? So is there anything I want to buy? Well, I have a couple of ideas. Number one, we have the Fed coming. You know all that. You know the fundamental support and resistance, like I mentioned. So I'm looking at this. This is sort of a creative trade. So on the right, I'm going to put on both charts the ES. So you see the support in the ES. You see the oversold on a 4-hour. Now, I'm not saying we're going straight up, but we're right in this zone where it was last week, even last Wednesday. So I went and did this. You get it up here. And I'll show you the method to my madness. So we know that the Fed's coming out, and like Bruce said, Fed coming out, we're not sure what they're going to say. Well, I have a different thing. Even if I knew what they'd say, I don't know what the market would do. But this is what I'm doing. I'm going to February 2nd. February 1st, I'm sorry, on Wednesday. That's when I'm flying to Austin. That figures all hell will break loose. But this is what I did. I went and did this. I did a 30-point butterfly that was at the market. It isn't anymore. I should have listened to Raymond that uses Rogge's indicators. I would have done a lot better. So she has a lot of good indicators. But see this? It's around 345. That's into the Fed. So I did this for 345. I posted it up there. And what am I going to do with that? Well, what I'm going to do with that is try to stay in till exactly before the Fed, hoping the market doesn't crash, obviously. But I want to show you something really interesting. So here's that one. And now I'm going to go to the Fed. Well, take one day out, but that's not realistic. Yeah, 7. Now what I'm going to do is go to on demand. I want to show you in November when the Fed came out. I want to show you what happened with the SPX flies. This is why I did it. I want to be sure I have the right day. All right. This is October 31st. It's like a Monday night prior to the Wednesday Fed meeting, just like now. So look where the index is, 3871. So I want to go into the Fed meeting. So I want to go to November 2nd. So you go into November 2nd and you look at, let's say, a 3870. So I hope everybody's following this. All I'm doing is looking at it at the money, hoping the theta overtakes the implied volatility expansion into the Fed and figuring that the market's at support. Notice anything? That's the same price as the one you're doing now. But this is where it gets cool. This is today. So that's today. So now we're going to go one more day. This is still before the Fed. It's 450. But the beauty of that, it's down 15, is move this 50 points, 30 points. So let's say right now it's 50 points in the money. Let's move it here. There you go. So that's 50 points lower than the spread I did. How about if you make it 3,800, 3,770? I mean, way out, way out. 295. So you mean to tell me if you're wrong on like 70 points, you'll lose 60 cents? That's a pretty good risk reward in my book, especially when the ES is at support. So that's why I put that butterfly in there wherever I put it. Yeah, this one. So I just went and did this. Now remember, I will be out before the Fed. I just can't make that more clear. I am betting that the decay matters more than the volatility, and I'm betting the SPX is sort of stuck in a range because it only went down because of fundamental, and now it's at support. So there you go. This is the one I did for 345. I don't type very well. Now, this is posted earlier. Keep in mind, the middle strike's 40.35, and this blew through it 15 points lower, and it's the same price. I think that's pretty cool. So just keep that in mind. That's the one I did, but I'm going to be out before the Fed. So there. Now, the market should bounce, and I'll probably get stopped on the other half of Tesla. You got to combine the market too. I haven't even looked where it is. Let me see. Oh, man. This is our first level, 167.90, and I think it hit it. Yeah. I'm probably going to put in, well, I'll buy the rest later, but I just want to show you on how that worked. So I did that butterfly. The theory is that one day later went the wrong way. One day later, it's going to be there. Yeah, that's not going to happen because the implied volatility is going to go crazy, but it just seems like a good risk reward as long as you're out before the Fed. So that's what I'm banking on. So that's number one. Number two in here, what else am I doing? Well, I like looking at unusual option activity. Now, regarding the first thing that everybody trades, end-of-day options, I can't do them today. I can't go and do a butterfly under the market because we're too extended from that VWAP I told you about. But I don't want to do one over the market because the market refuses to rally. If I did anything, I'd probably do something around 40-30, like this. That for 60 cents, betting on an oversold rally. So I'd rather do this at 55 cents. But if this is all of a sudden down 60, remember, I'm already long in a way. So here you go. I'll just post this. I have not done it yet. I think this is a good risk reward, though. So that's one. So number two, when I am bearish on a relatively thin stock, I'll go and do a butterfly. And that's what I did in UTHR. So all I'm doing is doing a cheap butterfly, betting on it breaking down if it's a stock I scanned. And that's all I'm doing. And the stock looks like it's breaking down. So all we did in here was do this. Wait a minute. I want to put in that order in SPX. Now, I'm not out of the rest of Tesla. It just seems like a good idea. I do not want it to rally yet. I almost put in June because I had that in my thing. So we're doing the January. Just try and do it for 55 cents, but I could be pissing away 55 cents. Don't get me wrong. I tried to pay 60 cents and didn't get it. So I need this down like 51.50 again for me to get it. Trying to pay 60. Damn it. Excuse my language as this gets broadcast to the world. But I think still this is just betting on an oversold rally. That's all I'm doing. But I have in 60 cents. So that's one of them. Number two in here, let me go over real quick UTHR. All I'm doing in there is I'm taking stocks that have bear flags, and it's like a horror movie. You know, the bad person's going out, but you're not sure how to time it. So we went and did a butterfly in UTHR. So why? Because it looks bad. Now, a lot of times it has one of those oversold rallies. So you don't want a short stock because I just don't like messing around with therapeutic stocks because of takeover kind of stuff. So all we did was bet on it going back to this zone, sort of the expectation of this bear flag. So we went, oh, I bought it for 60 cents. There. All right. So the whole idea in this is this: if this goes to 250, this thing will go way high, but you can't buy options because you could drive a truck through it. But a lot of times they'll fill you on option trades. See how it says 205? That's it. We did it for what, $1.60, $1.80. So this is going our way. We need it down about 2 more points, and then I'll get excited. So I just want to let you know that. But I still have it on. So where could it go? You see where it could go. And that's why I still have it on. So I just want to let you know why I have that on. So in there. Yeah, I just think if I see a bull flag, it's more likely the SPX will work. Just keep in mind, I'm doing something just because I'm short everything. So I just want to do something that didn't cost me a lot of money. So that's one thing. So Tesla, I'm still short. This isn't going to work unless I get a last second bounce and I used house money to lose $60. I didn't do it 8 million times. And don't get me wrong, sure, that could go up 12 points. So I'm telling you, on those kind of things, you just put in like $3 and you don't look again in UTHR and try to make your double. I have in to sell it at $3. So, I have in to buy more to $1.30. Now you might be like, why on earth would you put in to buy more? You never know if somebody just has to get out of something. So yeah, you could drive a truck through, but I have in to buy some at $1.30 and I have in to sell some at $3 because you never know if this goes crazy. Now, by the way, shrimp on the Barbie. Sure, that could go up $12. But I just think the one I did is better. And the second I say that, watch it overshoot. But that's what I did. So right now, where's the SPX? Yeah, not bad. We needed to bounce about another 5 points, and that butterfly would probably be a double. And darn right, I'd take a double. But wannabe trader, definitely, you don't sell it at the market. But I just put in to sell this at $3. Who knows? Maybe another site recommends it. So I put in to sell this at $3. Until canceled. Just to let you know, I have that in. So just want to make sure you know what I have in there. So that doesn't mean we're going to get it. It's only 240 in the money, but it's the right idea. And by the way, you got to look to sell this at a double in SPX if I can get it. So let's see. First thing I do is be sure I did the right one around 4:30. Yeah. Not good yet. We need one more pop. But yeah, I'll try to sell that at $1.20. Right now, it's worthless. So I need this to be down like 45. So that's just keep that in the back of your mind. It's not there yet. Now, a lot of times you get this oversold rally that goes all the way to here. Just sort of this trend line, and then it's going to be like 3 points in the money. So just keep that in mind. So right now isn't the time to look at penny stocks. I'll look another time because there's a time and a place, but that thing is just way too thin. So just to let you know. So getting back to it, we have earnings tonight, and we have earnings Tuesday morning. That's the next thing I do. And I go through this. I just go earnings Monday night, and I pared them down to this. Earnings Monday night. And all I do in here is take all the earnings. I look at the put call ratio, and then if the puts have more than normal action. Now, it can be 8 instead of 1. So just keep that in mind. So I have to put in to sell that spread. So I have in $1.20. Sometimes to get these pops, you got to have your order it in the SPX. All right. So I went through all these because the Robinhood effect, unusual put activity works a lot better than unusual call. This is called a put sizzle ratio. And all it is in some way, it's right here. It's like times the normal amount. It's just times the normal amount. But I look at put call ratio also. Now, the easier way to do this is then go through everyone and see if it really does a lot of options. Today, unusual. And unusual means if the open interest is small, but they've done a lot of out of nowhere options, sort of like the slime ball effect. So, just keep that in mind. Uh-oh. It's going to be $1 bid. You can tell. You need this 43.50. 43.50 and it'll be $1.10 bid. So you got to have your order in. I'm going to make it $1.10. Yeah, it's getting there. It's probably going to stop at that little twerk right here, unfortunately. But yeah, I'll try to get $1.10. So maybe I'll get lucky. So just keep that in mind. All right, so what else am I going to do in here? Well, the first thing is I'm looking at unusual option activity. I'll make it easy for you. The shorter term the option, so February instead of March, the more important. And also the late activity in the day is more important. So the easy way to do this is just detach this. So we'll just take SPX. Now, I'll show you why I'm detaching. All I'm doing is I'm going back to this, back to that, and then on another page, I'm linking it and just going through the options. And that's all I'm doing. And when you do that, none of these really pop out. So what pop out means to me, hey, I'm going to get filled. I'm going to get filled at $1.10. Come on. Come on, in front of everybody, let's see $1.10. Now, I'm going to put $1.05. I'm not going to be a pig. Yeah, it already went down. We had our moment of glory. Nope. But it's in the money. Don't forget that. You get this, but that's what I have in. But getting back to it, unusual option activity. What do I mean by that? Well, Caterpillar has earnings. Their close-in stuff has a lot of puts and a lot of calls. That doesn't help me at all. Just doesn't help me at all. So just keep that in mind. But this is the one that stuck out. Let me get it up here. I might still get it, but this is the one. So I'm watching the volume versus open interest. You're not seeing a darn thing. Ain't not seeing a darn thing. So what else am I going to do? Well, the first thing I'm going to do is go to either all of these and look them up. Hey, I'm going to get filled at $1.10 right now. Let's see. I have my sound off. Now we'll see. It's one of those things with the SPX that you get mad if you sell it at $1.10 and then it goes to 5, and then you're bummed out if you keep it and it goes to 0. So just keep that in mind in there. Still watching, still watching. But I wanted to show you unusual option activity. So I'm going to go to earnings Tuesday morning. So there's a bunch of them. So I sort them by put call ratio because I want to see more puts than calls. Look at this one. Anybody notice 105 times the normal rate? See that? So then I go to here, ALGM. There's an ALGM, this ALGM. So you see the option statistics. You see that it's a little off. Look at that volume. That's a lot of volume versus the open interest. So they've done some calls too, but you see the stock on a daily chart, it could go down a lot. So the theory is that those people know something. Doesn't mean they do, but they know something. Yeah, I do all types of trades. I'm not just doing options, no doubt. But so you see the 8,000. So somebody's betting on it going under 30. That's how it looks to me. So how do you play it? This is till February. You got 18 days. Do you buy the 30 call puts? The problem is it's got to go down 5 points to break even. Or do you buy the 35 puts, hoping it goes down 10 and you clean up? Or do you just go buy a spread for like $1.40 and buy this one? Because the stock, where could it go if you're dead right? Yeah, probably to 30. So I'd rather do this. Just do that spread for $1.48. And that's what I posted. All right. I sold the spread at $1.05. Let me post that in here. Not a bad return. And don't get me wrong, it's right. I might do it again. There, I sold it at $1.05. Not there. So I sold it. I sold it. So I didn't put that in there. Sorry. There. So I'm out. Now, don't get me wrong. This could pop again. But so I'm out. It's a good trade. Yeah, that's why you buy two. Yeah, you let one run. Now you got the house money if it pops. But getting back to it about this stock, ALGM. Now, let me just tell you, another one like this was Archer Daniels Midland. They traded a boatload of puts, 10,000 prior to earnings. And what happened on earnings? So what we did, just so you know, we bought the 83.78 put vertical, put debit spread that included that volume. So what happened on earnings? Bless its heart, it went straight up, went to 86. But I thought those 82.5 put buyers would get paid. And guess what? They did. So we sold the spread at $1.70. I posted at $1. We sold it at $1.70. On its way to wherever. So, just keep that in mind. So now what do you do with this one? Well, the first thing, when I showed you ALGM, the difference between that and Archer Daniels is this is in a big old uptrend. That's always dangerous. So I just went and did this. I just went and did this vertical for $1.48. Not that one, this one. It was $1.48. I already posted it up there, I believe. Let me see. No, well, let me put it up here. This is a shot. I do not have three reasons. It's not in a downtrend. The market, I think, is oversold. And but it's till February. I'm betting somebody knows something. Now you might say, how do you know if those are bought or sold? Because the open interest is only 400. So definitely they're opened in some way. So then you go to time and sales. Check this out. This is what I'm doing all day besides, looking up Amazon and eBay stuff. Look at the buys on the offers. Bid 30, offer 45. They bought 100. Bid 30, offer 35. Bought 100. So these are buyers. So just keep that in mind. Then they did some weird spread, but overall it's buys. So I just went and did that. So just let you know. So let me put that back in here. This is more a shot. Just keep that in mind. So buy vertical. Okay, a total shot. There you go. Now that's tomorrow morning, so you got to live and die tonight. But keep in mind, Archer Daniels opened up and then sold off. But I don't have three reasons for this one. I don't, but it seemed like a good risk reward when somebody's buying that many puts. So like I said, I'm out of the SPX. So I did that. I'm already out of the SPX. That worked fine. I'm in that butterfly that expires on February 1st in the SPX. And let me just show you. Let's see if I have it. The SPX, all the things I have on the downside, all of them it's paid for the slop we bought of out of the money calls. So just keep that in mind. So the next thing, where do I get out of Tesla? I want to be out. There you go. Too late in the day. I'm getting out of the rest now. Now you might say, well, it still looks bad on a chart. Well, if it opens up, I want to short it. Microsoft, no. Disney, I want to short on rallies. I'll show you why in a second. So Tesla, I'm going to put in to buy at market on close if they'll let me. It's a little late. There's your 167.50. If you're wondering what we're talking about, here's your Tesla, and there's my arrow. So I'm just going to buy it back the rest and not be a pig. There, I covered Tesla at 167.52. There. So I have no idea what the pin is. I'm watching that things are too extended to the downside, but the advanced decline just isn't that bad. So we already made our money on it. It sure seems, I'd think more 425, but I don't know. We took our money and now I'm not going to worry about it. I am telling you, you're starting to see risk off with Bitcoin down. So I think we're going to get a lot more bear flags form. So I'll show you another. So we did something in that ALGM. That's a shot. Just keep that in mind. That's a shot. Number two, we did the SPX. Uh-oh. That's what I was telling you. Popeye. Let's see what that butterfly is. I love to punish myself. Gotta just punish myself. It's still $1. And this is where it gets difficult. So the puts, sure, they could be a hedge. By the way, in ALGM, definitely could be a hedge. Usually, though, when I see it, it's like a round lot. $1.30. Great, I stink. But you were asking about that, about if it's a, if it could be a spread. Usually I see it as a round lot, like 5,000, 10,000. Instead, that ALGM, they were all over it in a lot of different ways. Look at this again. So that's not just one piece, and it's at different times. Now, there are other ones that definitely did. So, in there. Well, thanks for saying that. And, and Tesla paid for a lot of mistakes as well. But everything just seems too far from that VWAP thingy I was showing you. And JC mentioned it as well. Usually when it gets this far, it doesn't mean you can't go lower, but it's got to catch its breath. That's what I meant. It could go a lot lower, I guess. This just is pretty extreme. That's why I was looking to buy the SPX spread. But let me show you another thing when you're asking. It's a great question. Could they be hedges? And I'm not going to be a Weisenheimer and say if the stock opens up 5, yeah, they were hedges. I mean, that's obnoxious. The first thing is it's 4 points out of the money. Yeah, they could be hedges. So, but let me show you another thing. What's the other thing you just mentioned? Surfrider. All right, let me show you a different one. Let me see if I can find it. Now I'm going to do it this way because it's faster. Oh, I'm glad now I look like a genius. Right, on another screen, I have the trade grid, just so you can know what I'm talking about. I want to show you what I think is a spread. Here you go. This is Cisco. See the round lot? That to me is probably against stock. So when I see all little ones, that's fine. But I wanted to show you what I was talking about. So if I'm wrong, it was $1.50 out of the way, but keep in mind there's 17 days. It's not a weekly. Not a weekly. All right, next one. I got to show you Disney. Because all I'm looking for now is little patterns that might still work. And then I want to show you right on the close stock twitch sentiment. Yes, they brought back stock twitch sentiment. So it's been gone since they had the new version. First one, when I showed you the red candle in ES on the left on an hourly chart, that usually means you can find some good bear flag patterns, as you see. There and there. Love those. And this. Now, I'm still trying to scan for those, and most of them stink. So a lot of them is just looking at the major futures and going from there. So just keep that in mind. So the other thing in here, though, is this is a gap and a bear flag. So Disney has been on a tear. There. A lot of times at the top of a move, you get a gap, and then you get like a bear flag, quasi bear flag. If this tomorrow stays in this zone, even if the broad markets are up, I'm going to be all over playing this to the downside. Right now, all I did in there was some kind of time spread calendar, but that's about it. So I just want to let you know that. And it ended up being a good sale in the SPX. But that's your gap. And then, a lot of times that's how these end. This is another one. So you asked me if I trade a lot of different products. Yeah. So, so you were asking me about that. And Mulder, if I do all types of trades, well, I figure if I do enough trades, I'll eventually be right. So yeah, I do a lot of trades. I'll trade penny stocks. You show me a penny stock, I'm like, that looks good. But right now, these stocks are moving enough that I'm just going to play these. So yeah, but I'll definitely do it. I'm out of Tesla, like I said. I messed around with the other thing. And Disney still, this is the tough part. Do you short something for the urge to participate overnight when the ES is too far from its VWAP and it's at support? Do you short Disney because you're like, hey, that could be down 2 points? Usually what I say in that way is I'll go short a third. Like if I want to short 300 shares, I'll short 50 just to have something on. Something. But you don't have to do that. We're right at support. But if the whole market opens up, that'll be one of the first I look to on the downside. I'm just getting out of overnight shorts, other than the spreads I showed you. So as you see, Disney falling apart. This one, I'm not sure. Now, before you think all you're doing is showing bear ideas, well, they looked bearish. I'm not trying to be annoying, but they look bearish. They had that gap and then a correction. On the other hand, I was showing you unusual option activity on the with puts. Now you got the opposite. This stock had takeover approaches a long time ago. And look at the March calls. For that stock, that's a lot. Now, it might not seem like a lot, but 2,000 to 115s is pretty impressive. And look, 6,000 calls and 1,900 puts. So you might be like, okay, what do we do? What happens if it goes crazy? Well, the first thing is if the market goes crazy, this might go up anyway, and I'll show you a chart. So I posted this one for you. And Mulder, this goes with the thing, if I show you enough long and short ideas, I'll eventually be right. There, I bought that. 12.5 point spread, including the unusual option activity for 358. So I already posted that up there, but I'll do it again. So I have an earnings play, I have some SPX plays, and I have a Splunk play. So in there. Yeah, Mr. Daddy. Definitely it's going to happen while I'm flying, and you know it is. That's why I have some long and shorts. Now you might say, why do you have anything? Well, I might be out of a ton tomorrow, so I don't have to deal with it. So market's going to close, and then I want to show you unusual option activity. Sentiment if you want to see it. Here you go. Here's stock twits. You go to your normal stock twits. Yeah, I blocked advertisements. They're probably mad at me, but here's stock twits. Now what I do is I go to SPY. And their site's been slow lately. There. So there's your SPY. About, feed, sentiment, fundamentals, news. I don't look at all the news. It'll blow my head up. I go to sentiment. And all I'm doing is that. They have all kinds of stuff like message volume. I don't care about that. I care on the SPX that has or SPY that has so many followers. I care about the sentiment. And what are you going to notice about the sentiment today? It's bullish, which I use as a reverse indicator. You go to see all time frames, and it was bearish before the market rallied a month ago. That's pretty cool. So that's the kind of stuff I look at. Most of this, you see the little lines. This time it's bullish. And every day I look at that. That's 15 minutes ago. And then a day ago. And I just look at it every day when I start the day. So hope that helped. And like I said, I hope that helps and, enjoyable. And we made some money on it too. So take care, and I'll talk to you later.